Hello and good afternoon,
Afternoon,
everyone.
everyone.
This is Little Stark Industries earnings call meeting. Thank you for taking time out of your day to join us and hear how our company is doing. On this call, we have various managers who will now introduce themselves. My name is Mariam Almanza, and I am the Product Design Manager, and handing it off to Tiffany.
Hi, so I'm Tiffany Johnson. I'm both the CFO and the Drone Marketing Director. Off to Emmy.
Hi, y'all. I'm Emmy Stromer. I'm in charge of the camera marketing. And I'm going to hand it off to Yuhei.
I'm Yohei. I'm the warehouse manager of Little Stark Industry.
Great. Thank you, ladies, for that introduction. Now we can get started. To start off our call, we would like to go over our company strategy and our investor expectations. Little Stark Industries has been focusing on a differentiation strategy over the years, which means we are creating a superior customer value compared to our competitors, and in return, our company can charge a higher price. Because Little Stark Industries focuses on customer evaluation and experience, we will focus on the physical and perceived value they may hold. These three values are product design, marketing, and our corporate social responsibility. In year 12, we met our investor expectations for all 5 of the metrics we use for the measurement of our company's success. We had high numbers in earnings per share, return on equity, stock price gains, and our credit rating, along with our image rating. These numbers are where they're all supposed to be at, which makes us really happy, and it gives us hope for the growth of our company. You're probably wondering how we got these results and how we measured our performance success. It was our wonderful and strategic managers that got us to this point where we saw positive outcomes. Our net income increased and went from $119 million to $155 million. An increase in net income can lead to increases in EPS and ROE for the next year. We are able to get these company results by eliminating operating loss for Latin America region. We saw a negative impact in revenue for this region, and it was a decrease in about 19.90%. This is why we decided to decrease advertising costs within this region so we can focus on other regions who were having more positive ones. We maximized operating profit for the Europe-Africa region for our camera because of revenue impact, which was an increase of 0.91%. In this region, we decreased the price from $450 to $350 to increase our demand. We added retail outlets to boost demand. We also increased sales promotions to 16 weeks and added a 25% discount to increase our demand as well. And on top of that, we also shortened the warranty period from 360 days to 90 days in order to decrease those repair costs. Finally, we decided to put our funds where it counts. We repurchased stocks increasing our ROE and stock price. Issuing stocks has been proven to be good for increasing our ending cash, and then that money is reinvested into our company. We have increased our charitable donations and our innovation projects because of that ending cash, which again, it's good for our company's value and our company's future. Our credit rating was an A because we didn't take out any additional loans, and our debt to equity percentage is good because we have less debt than equity. We end up with enough ending cash that we have a better ability to pay for our debt. Our image rating has also stayed consistently high for us because our mission has been to produce ethically sourced cameras and drones. We are always actively participating in our corporate social responsibility. We have invested around $13 million and $11.50 per unit sold into our corporate social responsibility. With a differentiation strategy, it is important that we not only focus on our physical value, but also perceived value, that way customers have a good image of our company. For our year 13 projections, we have high hopes for our numbers. We are continuing to run a similar strategy as we intended for year 12, and therefore Since we are projected to meet investor expectations again, our stock price should increase by the same percentage. All of these numbers are looking good to us. And we, again, have high hopes for the growth. Finally, moving forward with our action plan. Individuals like to support businesses who do good by society. So one of the ways we can create that perceived value for the customer is to improve upon our corporate social responsibility. Increasing that CSR is a good image for our company, like mentioned before, and that's what we've been focusing for in the past years, and that's what we're going to keep focusing on for year 13. To stand out and create a valuable product, our focus is to create a unique product, so we are going to improve features and spend additional money up to $10,000 for both the drone and camera research and development to continue growing that PQ rating. Buying back shares is going to reduce the quantity of shares in the market, which is going to increase the revenues per share and earnings per share for our company. We're also going to continue watching those exchange rates. Exchange rates can drastically affect the revenues and profit received, so marketing only to the North America, Europe, and Asia Pacific regions will provide us with positive exchange rate returns instead of negative ones. And then finally, we want to include robotics in our facilities to reduce those labor costs and increase productivity. This will help our manufacturing process to be run more smoothly and meet customer demands more timely, decreasing our delivery costs. That is it for our earnings call. Thank you for joining us today and hearing what we have to say about our progress and improvements. I believe Little Stark Industries has potential to be one of the top performing companies in our industry. We have faith in our differentiation strategy and the way we view business. Please feel free to ask us any questions. Thank you again for joining us today. We would like to welcome any feedback and any improvements that you may have. Thank you. All right, you